Most of us spend our time saving for the future. We might as well invest our hard-earned savings into something that will make it grow without having to work that much eventually. But before we jump into any kind of investment, we must first determine our objectives.
Before you invest, determine what is the return objective. Is it simply wanting to earn some form of regular interest, or is it something like you want some capital appreciation in the process? Those are two distinct objectives.
We must also consider the risks that go with it.
There isn't really any safe investment. Some may be a little more safe than the others. Government bonds are typically safer, as you would expect that the government will always honor its obligation.
There are several types of fixed income securities that you can choose to invest in. From treasury bills, retail treasury bonds, fixed rate treasury notes, global peso notes, and many others, each with its own term, interest rate, and payment periods.
There are also risks. Even if it were a government debt, if for some reason the value of the bond goes down, at that point when you choose to sell, there may be some principal losses. So it's not completely safe.
How does this actually work?
The value of a bond is dependent on the future cash flows that you receive from it. If, for example, you buy a bond that pays you an interest rate, let's say, of 5% per annum, the risk is if interest rates move up, let's say tomorrow at the earliest, and it's for the same tenor, if you will, interest rates move up to 6, then you would say, my 5% investment is not as good as the 6. In that sense, the price drops, and if you choose to sell, you've already lost money. Fixed income securities, it's a debt. It's an obligation of a borrower in the form of a bond. It pays a fixed coupon, that's why it's fixed income, and for a predetermined tenor. Right now, what we see in the market are easily tenors of 5, 7, and 10-year bonds.
Acquiring a fixed income security may sound grueling and demanding for most of us, but the process and requirements can be really plain and simple.
We would ask you to fill up a client suitability questionnaire. In that questionnaire, we determine your profile. What kind of investor are you? Are you a risk taker, or you're one of more the risk-averse investors? We look at your requirements. What are the objectives of the investment? Depending on the profile, we could offer you different kinds of fixed income instruments.
Whether you're a yuppie in your 20s or a retiree, you can always choose your preferred investment with a fixed income security.
Please do drop by any of our branches and open an account. Have the branches call our team here directly in Treasury and Fixed Income Securities Division, and we will be willing to offer you a varied set of choices when it comes to fixed income instruments.